You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome, and you are listening, watching the Financial Survival Network. I'm Kerry Lutz, and today is September 28th, 2021. The markets are in flux, to say the least, and we thought it was a good time to get our good friend Gil Baumgarten back with us, segment wealth management. Well, Gil, as a wise man once said, markets will tend to fluctuate, sometimes on the up and sometimes on the down. Are we having the much awaited correction, and is it going to become a crash?
Who knows? I don't know. It definitely is a good sign that we have corrections. I mean, I don't like it to go straight up. It actually feels good when you see money appearing in your brokerage account, but it's not healthy for it just to head in one direction. It needs a periodic slapping every now and then to kind of shake loose those fickle visitors who want to come in and make all the easy money and then try to leave. They have to have their confidence shaken from time to time so that true base value can be found and determined for the equilibrium of all the pricing decisions of everybody else. And so these kind of days used to just bug me because I hated watching my personal accounts and my client accounts decline in market value. And then I determined, it's just a periodic excising. It's the exact same thing as trimming the hedges in your yard. They always come back healthier than before. And so this kind of stuff doesn't bother me anymore.
Yeah, so you're used to this, right? You're a professional. You're used to it, and it's just more of the same, right? I mean,
that's right.
Just so, but every boom ends with a bust, right?
That's true, but the marketplace really operates as not two steps forward, one step back. It's 4 steps forward and 1 step back. So if you don't have those periodic 1 steps back, that's what keeps the other 4 steps in sync. So I'm fine with it. 81% of the time the market's going up. It's that other 20% of the time that everybody hates.
All right. Yeah, well, we don't like it, but markets will tend to fluctuate, as the saying goes. But there's a lot of negative trends occurring in the world here.
Yeah.
What are we supposed to think, right? I mean, this thing is, it feels like it's got a house of cards type quality to it, if you will.
It does a little bit. I worry about the day that interest rates begin to normalize. I don't think we're there yet. I worry about boom times that are created by low taxes, which you hear certain sides of the political spectrum naysay. I heard Joe Biden had said, I didn't hear him say it, but I heard he had said, look at what I inherited. Yeah, you inherited a booming market, a booming economy with full employment, mostly due to low taxation. And then he's proposing this $3.5 trillion so-called Build Back Better tax increase. We are not going to have good economic outcome that comes from that.
Yeah, where have I heard that before? So look, what are you supposed to do? Are investors supposed to just get rid of all their tech and move to energy? I mean, last night, watching natural gas prices, they hit $6.29 per million BTUs, which the last time we saw anywhere near that was during the polar vortex. There was actually a reason for it to occur. This is definitely a bit cause for concern, isn't it?
Well, it doesn't concern me because I'm from Texas. I own oil-producing minerals, and I am overweight to energy in my own account and in our client account. So I'm perfectly fine with it. In the past, my wife has grumbled about $4 gasoline here in Texas, which that equates to like $6 in California. And I'm like, honey, that's the best thing that could happen to us. So it's not a bad thing for us. I do think that energy is poised to go go higher. Anytime you have an administration that is hostile to domestic production, but seemingly okay with foreign production, you're going to end up with high energy prices as a result of that. So we would continue to buy the energy index. We would buy the pipelines. We would be buying just the majors and the ETFs that are associated with that. So XOP, which is the minor oil producers, XLE is the major oil producers. My firm and me personally have a position in EOG. We own Marathon, MPC, and then we own some of the pipelines, Enterprise and the like. And we also have a big position in InLink Midstream, which would be ENLC.
Okay, what about the United States Natural Gas, UNG, that ETF? You got any feelings?
We don't have any of the commodity-based ETFs. We do own a position in a natural gas-focused producer, which would be Cabot, which would be COG. They're very highly natural gas leveraged. So that would be something that we would be taking a look at for your audience.
All right, we like that. So you're still bullish on nat gas then?
Don't just survive, thrive. The Financial Survival Network.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
The point I was making was that people think that electrification of transportation, Tesla, GM going to a lot of hybrids and electric cars, Volvo saying that they're going to stop producing. They originally said they were going to stop producing piston engines, but then they kind of seems to have morphed the message into all their cars are going to have some kind of electric feature, whether that's hybrid or electric only. A lot of people are, saying that that's the end of energy production with fossil fuels. Man, that's just the beginning. It really cracks me up when I see a Tesla driving down the road that has some kind of license plate that says, zero emissions. That's zero emissions at the point of consumption. That energy ended up in the grid one way or another. It could have been coal, could have been nuclear. Most likely it's natural gas. It's just a matter of, internal combustion engines just produce their power by converting fossil fuels at the point of consumption. Electric is consuming fossil fuels too. It just happens to have been produced off-site. So it's not the end of fossil fuels for the United States for generations. So,
Yeah, I couldn't agree with you more. I mean, look, it's a simple matter. There are on the planet right now 1.4 billion cars and light trucks. All right. Right now, the EV share, not including hybrids, I don't count them because they're not really EVs, is a couple of percent. Every year, we produce 80 million light cars and trucks. Just at that rate, you're looking at 16 years. If we switched all out-and-out EV production tomorrow, it would be 16 years to get everything converted over to electric. 16-year cycle. The reality is it's going to be 25 years. Yeah. And when you look at that, then you say, maybe we have an electric future, but it's not happening tomorrow. It's going to be another 5 to 10 years before EVs hit critical mass.
At least.
And are selling more.
At least. And then that doesn't even acknowledge what portion of the grid is being used to fuel EVs. What is that, 5%? I don't know. If I had a Tesla or two plugged in at home, how much would my bill rise? I pay $500 a month in electric bills right now. Would it be $600 a month? I don't know. But that tells me that 80% or more of our consumption of the grid has nothing to do with EVs. So I do agree that it's got a bright future, but it is a long way off from electric being the way of the future. And we still have to fuel the grid, irrespective of whether we have EVs or don't. So, and that's natural gas, and that's coal, and that's nuclear. It's, high density production is the name of the game. We can't survive on a windmill. I couldn't have a windmill big enough at my house to fuel my house. I have to have more energy density than that. So
exactly. There is a company out there. I'm sure you have noticed them, and called Alset eHomes, and they're going to put in Tesla walls, solar cells. Everything's going to be sustainable. The houses are even going to come with a Tesla. They're talking about doing a few hundred of these, and it's kind of ridiculous to think.
It has a nice green ring to it. It just doesn't mesh with the reality of the world that I live in.
Yeah, exactly. It's got a great ring, and it might very well be very successful. But at some point, it's just ridiculous to think that this can really be an overnight sensation here. So energy's with us, and the policies that the government is pursuing is undermining the existing energy sources that the economy relies upon, to the point where in places like New York, they won't build a pipeline. The administration nixed the Keystone 2 pipeline, all these things. So at the very time, this is really preparing us for a major, major energy shock, isn't it?
It is. So yes, policies that you see coming out of the current administration are hostile to U.S. energy production and consumption, and they are not hostile to energy consumption and production in other parts of the globe. So that just puts the U.S. at a disadvantage, and that anytime you're at a disadvantage, that means prices are going to go up. Unless you're going to stop consuming. And if you just want to sit at home and, leave all your lights off and don't go anywhere, then you can opt out of the system. But otherwise, the rest of us are going to go on with life, and we're going to pay higher energy prices as a result. So,
Yep. Couldn't agree with you more. This is just going to be a huge, huge blow to the country and to the world. We already see it in Europe. I mean, Gil, in Europe, they're at $30 a million BTUs. That is pretty much huge, isn't it?
Yeah, it is. One of the interesting things, if you think back to a year and a half ago when COVID hit and the like, and I think energy bottomed in March or April of 2020, that was a debt clearing event. If you were a low-hanging fruit energy producer, highly leveraged energy producer, a bank with a leveraged balance sheet, levered to energy, you had your come to Jesus meeting when futures prices on energy went negative. You actually had to pay somebody to take the filthy stuff off your hands. Anybody who was a low-hanging fruit producer at that point in time pretty much got wiped out. And those types of debt clearing events tend to produce the opposite outcome in their wake. Yeah. Once you have a debt clearing event that pretty much wipe out the low hanging fruit, whether that be real estate, the savings and loan crisis back in the 80s, whatever it is, these are all the same types of events where all the weaker players get obliterated and the stronger players just have to adjust their balance sheets. And then you come out of the backside of it, you almost get a near certainty of the opposite event. You have people who have had to clear out all their positions. Well, what do they have to do to survive? Well, they have to put all their positions back. And so you tend to have a run up on the backside of debt clearing events. And I think that's what we're experiencing now. And that's the reason why my firm is overweight to energy and has been for some time.
And this is exactly the issue of what we're facing now and why these policies are so misguided, because Yeah. What are we going to do? In Europe, they're shutting stuff down, truck driver shortages, all these insane things here, Gil. And nobody seems to be any the wiser for it, right?
Well, I think people are being tested as to what they're going to put up with. I see a lot of what happens with COVID as not necessarily a healthcare event, but more as a political event. And I'm not going to say who's saying what. I'll just be general about the fact that I think you can align your liberal-leaning friends with one perspective on COVID, and I think you can align your conservative-leaning friends with another perspective. I'll just leave that open to interpretation. I'm not going to say what is what. I just say it's very unusual that a healthcare event has predictable political circumstances underlying it. And I'll just leave the comment at that.
Yeah. Okay. Yeah, we don't need to get into politics here. And there's a lot of serious underlying issues with our global health issues for sure. So now, all right, you're in Texas and you're an energy bull. Have we missed the energy bull market, or you think we're going to see new all-time high prices on oil, natural gas? Because we're not at all-time highs. We've seen $12 nat gas. Nat gas prices were a lot higher before the fracking boom. And one thing I haven't been able to ascertain, Gil, is exactly how many shut-in dry natural gas wells there are around the country. I know there's like tens of thousands, but nobody seems to have a number here.
Yeah, I don't know what the numbers are either. I just know that there's clearly shortages, and we haven't even gotten into wintertime yet. So wait till we have cold weather, and we already have $6 plus natural gas prices. Depending on how cold the winter is, you could see that go a lot higher.
Yeah, a lot higher.
We're definitely not at the beginning of the boom, because a lot of energy stocks have already doubled and energy prices have more than doubled. So, but I still think that there's room left in this run.
Hey, we could see $12 to $15 nat gas. That's my call. I knew this was coming for weeks, by the way, because certain internet intelligence tools that we have at our disposal showed that there was inordinate interest in UNG, which is the United States Natural Gas ETF, like I mentioned before. So this was coming. There was no question about it. And we had massive inflation. It's just that nat gas had already gone up 130%. People were thinking, it can't go up anymore. Parabolic move. It'll have a blow-off top somewhere north of $10. I hazard to say how much, because just to say 12 to 15 is easily within the realm. Hey, Gil, we're in the same mind here. If people want to find out more about what you're doing, connect with you on the web, how do you do that?
My firm's name is Segment Wealth Management, SEGMENT. My URL is segmentwm for wealthmanagement.com. They can go there. There's also a gilbaumgarten.com website where they can look at some of the other things that I'm involved in. But my book is called Foolish. They can buy it on Amazon. How investors get worked up and worked over by the system. So that would be another way for them to connect and see what we're about. We also write a blog. It's free to join. We don't solicit anybody. We just give out information. So you're not on some kind of a mailing list other than just emailing you with things that we write about. And that would be segmentwm.com/blog. They can sign up right there and get our periodic read on the marketplace and interest rates and taxes and all the things that would affect investment performance.
All right. Excellent. Really appreciate you coming on as always, Gil. You're a breath of sanity and fresh air in the investment sphere where there's so much hype and garbage going on. And if you got a question for Gil, just drop me an email, kl@kerrylutz.com. We'll get it answered for you. And don't forget, go over to the website, financialsurvivalnetwork.com. Sign up for your free newsletter. Gil, always a pleasure. Thanks so much for stopping by.
Thanks for having me. We'll see you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.